Good morning, everyone, and welcome to the European crossover webinar. And we just came in with the some Italian data. This one's not coming into a little bit later on here, but we did have some come in. The Italian Q2 unemployment rate 9.9% versus 10% expected. I'm going to move this out of the way. Now, obviously, the big mover today is going to be the ECB. That's going to be the big mover. We do have at 8:30 Eastern. Obviously, I'm here in Texas, so I've got mine listed for Central Time. But 8:30 Eastern is going to be core CPI, as well as jobless claims. We do have new housing price index coming out of Canada for that data. And then at 11 a.m. Eastern is going to be Cleveland Fed CPI. Move this out of the way. We are seeing the euro start to work up a little bit higher. Yesterday, we did make a run toward that bias chart support that we had, which is 989. But the market stayed relatively quiet. I mean, we're just kind of eking up a little bit now, but we sort of did. I mean, the rally, if you can call it that, wasn't nothing to write home about. So we'll go on and get to what we'll be looking at. Get rid of this. Table itself is rather quiet, to say the least. Barely even moving. Maybe some of this Brexit news is starting to calm down a bit, especially with Parliament out. We did see quite the jump here in the yen pairs. Yesterday morning, I was looking for, I've been talking about looking for this 788. We talked about it well over a month ago, and it never came about. It looked like it wasn't going to. And then yesterday, even when 10-year yields were really pushing higher, we simply couldn't take it out. But then yesterday, Trump announced that he'd be delaying or reducing, whatever. I mean, he goes on with these tariff bits. But anyway, it was enough to go on and spark a quick jump here in the yen pairs. And certainly we saw us take out the 788 and jump up even higher. I do have a short position just below 780. There's 775, I guess it is. I think it is. But I'm hanging on to that. Fortunately, it's a small position. Only thing, finally, when it looked like it was going to turn, I thought, okay, well, I'll go and get short now. But of course, then we did eventually for what would be an unforeseen event with Trump then going and making the announcement on the delay or impact of those tariffs. Certainly gave us that push higher. Now we have seen 10-year yields pop up above 175, and they paired back. We'll take a look at that quickly. So we did go and get this jump above 175 on that announcement. We've since come in, so that may allow the yen pairs to come in a bit also here. More so the dollar yen, I should go and say. We also saw the thought about him easing the tensions with Iran. He's trying to get this meeting with Rouhani, so that really kicked the crude oil in the teeth. We already had come up here in the 2-hour chart, and we already had a gravestone doji right here. And we took a dip, and we came back to challenge it, and then we faded, and then the wheels really came off the caboose. We actually came down here to the 38%, basically right here to the tick. Here, let me take a look at this entire move here. There we go. And that's the 38% right there from 50-52 right here. Nailed it, or not nailed it, I mean, saying is it took it out or matched it just basically to the tick. I think we took it out by what, about 2 pennies or something like that. So Initially, when we're looking at it yesterday, when things were much quieter, we're using this range. But here also, 50.74 was the 50% of this entire move. So a little bit of a confluence here. Then 55.74 being the 50%, with 55.60 being the 38%. Right here at the low off of this move, coming in right here at 74 for the, or I believe it's 77 for the 50%, and then all the way back here to 50.52. A much bigger pullback is come here to test at 38%. But certainly with the action that he's taken, certainly opens the door for even lower prices. So we may just be kind of gathering and the market licking its wounds, and upside might be rather limited at this point. We also saw the gold market come a little bit under pressure when the announcement 10-year yields went higher, and on top of that, S&Ps went higher. But we've since recovered here in the gold and the spot index here. And we did see the S&Ps take a move up here to this 30-20. Let's take a look here. So a lot of good resistance coming up right here, this 30-20. Looking at the cross rates, we certainly going, as I mentioned, saw these yen pairs react, and boy, did we really take off here in the Aussie yen. We've come off a bit, but boy, did we make a pretty good strong move up in here. I think we made it to 74.47 if I saw that correctly. So quite the move here. Remember, we talked about this generating a buy signal. I got stopped out, but that was early yesterday or late Asian session. I think it was actually a late Asian session for the night before, not last night, but the night before, which I'm glad. I mean, in the sense that it was a little bit frustrating, but it's obviously much higher from where I got stopped out. The only thing that was very frustrating to me is, and like I told you, that's one of the reasons I like using the exponential moving average. Just if nothing else, it keeps myself out of trouble. But quite often I ignore things. Is that I came in and shorted, and then made a couple of nickel statement, reshorted, and then reshorted an ad and covered that for a little bit better. But I said, hey, look, you know what? We got a buy signal here. And at that point, I should have just accepted and said, you know what? But we talked about this. It just barely, it's kind of a little bit tricky in here, but nonetheless, it's a buy signal. And that opened the door for us to move higher. Now, obviously, other things led to, when the whole thing with Trump easing those tariffs, and we saw the S&Ps take off and yen pairs take off. Just a moment. But certainly we've seen a pretty good move here, including the Kiwi yen. Boy, a nice little run up here and here also. Look at that move. Let's go on and move into the main page, though, and we'll get to the news. Obviously, the big mover today is going to be ECB. It's ECB day. Draghi's last ECB meeting himself. And obviously, with crude oil, we saw a pretty good reaction here on the dollar CAD. When crude oil came off, the dollar CAD took off. We did come into our bias chart resistance, which we had at 32.05. And then we've since rolled off a bit. I mean, hung up there for a little while, but we've since come off a bit from that area. So let's go on and move into the news here. Brace yourself for the ECB. World markets are bracing themselves for a week of central bank meetings and probably another wave of monetary easing, starting with the European Central Bank on Thursday, then a Federal Reserve rate cut expected next Wednesday, and possibly further easing from the Bank of Japan and Swiss National Bank next Thursday. Turkey's central bank, meantime, is expected to announce another interest rate cut today, as much as 250 to 300 basis points. The big debate on all these decisions is the extent to which fresh monetary policy is already priced in and whether it will underwhelm then the aggressive nature of the recession and policy response bets through August. The bond markets have at least been recalibrating over the past week with nudges and winks from officials that perhaps not all the cards will be played, not just yet. The ECB expected to lower its deeply negative deposit rate again by at least 10 basis points, but there's been some questions of whether it will immediately begin a new round of bond buying of about 30 billion euros per month. A hold back on that decision until new President Christine Lagarde takes over in October. There's also some uncertainty over the extent of offsets for commercial banks from the damage caused by an even more negative deposit rates, possibly tiering of the rates charged or more generous special refinancing terms. President Trump stepped up his pressure on the Fed on Wednesday, calling for its policy rates to be cut to zero or even negative as what. The Fed is unlikely to cut by more than a quarter percentage point next week. On Thursday, however, stock market has been buoyed in advance of the policy decisions and on further signs of détente between Washington and Beijing over the trade before formal trade talks resume next month. Trump pushed back the next U.S. tariff increase by 2 weeks in response to China's exemption yesterday of some of the U.S. goods from its measures. The S&P gained about 7/10 overnight, and the VIX fear index of Wall Street equity volatility drops to its lowest since August the 1st. The all-country and world stocks index climbed for the seventh straight day on Thursday to its highest level in 6 weeks, the best winning streak since early June. Held by trade war developments, Shanghai, Seoul, Tokyo stocks were up 7/10 to 8/10 higher on Thursday. Hong Kong ended on the red, with many casting doubts on the Hong Kong's exchange set near $40 billion bid for the London Stock Exchange on Wednesday. Let's see, and we're just going to move on. And the ECB turn stimulus package taps back on to prop up the ailing economy. The European Central Bank is set to unveil fresh stimulus measures on Thursday to prop up the ailing Eurozone economy, but its exact moves are far from certain and a decision that underwhelms risks pushing up borrowing costs. While other major central banks easing monetary policy, Germany at risk of falling into recession and inflation expectations sliding, ECB President Mario Draghi has all but promised more support, putting all of the bank's tools in play. However, Draghi, who hands over the leadership in the central bank to Christine Lagarde at the end of October, will face pushback from the more conservative members of the Governing Council. Some policymakers have voiced concerted public opposition to more radical stimulus measures, particularly the restarting of bond purchases known as a quantitative easing. Also, Draghi's dovish talk has raised investors' expectations so high they'll be difficult to fully deliver on them, leaving the ECB at risk of disappointing. This could see the market interest rates and the euro exchange rate increase rather than fall. There is a high certainty about the extent of the expansionary measures the ECB will implement today. Therefore, is large potential for strong fluctuations in the euro exchange rate, Commerzbank strategist wrote in a note to clients. The single currency has fallen 3.5% against the dollar since ECB began signaling an easing of its monetary policy. While the ECB has a wide range of policy instruments at its disposal, each comes with complications from questionable efficacy to big side effects. The Eurozone's biggest troubles, a global trade war, Brexit, and China's slowdown, are all outside the central bank's control, suggesting any stimulus would have a limited impact. Since still the ECB is expected to lower some of its growth inflation projections, highlighting the broader risk to the economy. Reinforced policy guidance, a cut in the ECB's minus 0.4 deposit rate, already a record low, appears to be at least contentious move, and policymakers will at least contentious and will debate on 10 or 20 basis points reduction. Although this would lower short-term corporate borrowing costs, it would immediately hit bank profits as negative rates essentially amount to a penalty charge on more than 1 trillion euros worth of excess reserves. So the ECB is likely to exempt banks from part of this change by introducing a multi-tier deposit rate. While this option would give an immediate boost to banks, critics argue it would be small and would disproportionately benefit banks in France and Germany. The ECB is also expected to push out the time of any rate hike even further, providing a reinforced guidance on rates that would tie any move to certain inflation conditions, lowering the emphasis on calendar dates. The most contentious part of the package will be whether to restart bond purchases. Although this is ECB's most powerful weapon, over a dozen policymakers, including the central bank chiefs of Germany, France, Netherlands, Austria, have expressed skepticism about the need for it. They argue the bloc is merely experiencing a slowdown, not a recession, and such a tool should be reserved for real crisis, especially if the ECB has already used up much of its firepower in the rounds of stimulus. Indeed, rates are at record lows, and the ECB's balance sheet is more than a third bigger than the U.S. Federal Reserve's, indicating limited room for more action. But with the Fed cutting rates last month and sending some dovish signals about future policy, the ECB can hardly avoid keeping pace to stop the euro from appreciating and further dampening inflation. While we don't see much room for the ECB to disappoint on rate cuts, forward guidance on ensuring we think the German Council may be less dovish, governing council may be less dovish than what is priced in, and delivering a less generous asset purchase program, Nomura said. Draghi is likely still to have the votes if he wants to go ahead with any bond purchases, but opposition from the bloc's biggest economies could be damaging to the bank's authority. Possible compromises include an approval of a relatively small bond purchase scheme without changing previously established purchasing limits to avoid a string of legally contentious issue. Although issue is with Draghi leaving with October the 31st, with some policymakers appear less keen to make a long-term commitment that would be tying the hands of the bank's next president. A compromise solution could be announced at QE, but to leave the details until later. This would buy more time for the ECB Governing Council to reach a consensus and allow incoming President Christine Lagarde to own the program, BNP Paribas economist Luigi Speranza said. So let's go and move in now to the actual analysis here. Certainly, we've seen big moves overnight or since yesterday with oil, obviously with Trump delaying the tariff, big moves in the SPUs, the yen pairs, even in the 10-year yields, which were already moving at the time. Let's go and take a look here with the euro. So today is really going to be tricky. I don't think Draghi's going to hit everything. I don't see that. I think it's going to be a combination of probably the best combination is probably going to be the one that we just talked about, where they keep things kind of like, and I just purposely went to this right now. This one where he says includes a small relative bond purchase scheme without changing previously established purchase limits to stir up a legal contentious issue. And he kind of leaves things kind of like in the, I wouldn't say in the dark, but where they can be worked out a little bit later. Yeah, it says here a compromise solution could be announced to QE, but to leave the details until later. I'm thinking he's going to go along this line. They might talk about some other things. It still leaves the door. Still leaves options open for Lagarde. It's something that they can push through, because another problem is if he goes full bore, then what will happen is, or what can happen is, about an hour, 2 hours later, after he's finished flapping his gums, then you're going to get quotes from Germany, Austria, and some of the others that may be saying, "Hey, that was too much. We don't agree," and then that's going to actually take some of the push out of that. And even if they do get that, they already know that the concerns from those presidents and or representatives, I should go and say, from Germany and Austria and a couple of the others that feel it's going to be too much. The market's probably going to see through that. I'm thinking, even if he turns on the spigot, I'm thinking is that even though it says he has the votes to do that, you're going to have the market be saying, maybe we go on dip, but the market be saying, Germany doesn't like it. Austria doesn't like it. We're beginning to look at a couple other countries. And so we may end up, even if it gets down there, you may end up seeing the euro eventually going a little bit higher as the day works on. So where can we go as far as support? Well, golly, this is going to be a tough one. We have to look at this in, let's see here. We've got 67, and then we have the lows at 928. And I think that's going to be the way we're going to have to look at it. Let's go here. Let's take a look at the 2-hour also. So it's going to be 965. Let's go into the daily. I remember seeing that 895 before. Let's see if there's. $893. That's a relief. And I just don't see where he's going to be able to do that. I just don't see it. I honestly don't see it. What I'm going to go with is there's no way that they're going to, and to turn on all the bond purchasing, you're going to leave Christine Lagarde with nothing to work with at that point. And I think that Draghi will make a good attempt to do something, but if you spend all the ammo, you've got basically nothing left. I mean, nothing. And so if we do see a big slowdown, boy, then they'll be in a lot of trouble. So I'm going to go with $965.20. I just don't see that they can go a whole lot lower. Tell you what, we're going to do it this way. Let them take out this, and let's take a look here. Yeah, it's going to be 965.20. And on the upside, once again, another tricky one here. They would be able to take out this 1060 even if they just did it for stops. So it's going to be here. $10.76 on the upside. Obviously, the next key one would be 1131 if things really changed around. There we go. So 965 says 15, 1076, 1131. I don't want to market bullish. I don't want to market necessarily bearish, and it's kind of silly to say it's in a range. So we'll just leave this as it is for right now. Let's go move into the cable. Let's get things cooking. No changes here with the cable. I mean, in light of, let me take a look where we're at. Yeah, no changes here. 2282, 2406. No changes. We're dead in the water. Okay, with that, let's get moving. Let's get this rodeo going. Move into the Aussie dollar. Boy, we've gone past here. We've even exceeded here. Let's go and take a look here. I've got a 30-minute one. Let's see. But we have definitely moved. And we're even just past this 50%, which we tagged, but we're only just barely above it. You would have thought we could have seen even more of a move. Well, it's got to be right there. And that's a big level here. You can see that 6902, huge level. And for support, even if we rotate lower, would actually come in there at 68.53. Actually, below 68.52. Let's move on to the Kiwi. Well, you can see that clears a doggone bell. 38%. Let's go move this here. Actually, there's a nice little level coming in right there at that 64.70. Just, yep, right there. Call it 64.70. Says some BOJ members said to believe the JGB yields are close to a tipping point with the move below 3/10 would consider action. Two. Yeah, let's go over here. I was going into the find the support here. $64.08. Boy, the fortunes for the Kiwi have certainly changed. Let's go move into the dollar CAD. With that news, we've just seen the dollar yen just tick down a little bit further. Um, so we saw a pretty good reaction here in the dollar CAD. Um, we'd had this area down here. You can see this. There's 32 right in here, coming in here. Um, and we've had this level we've been looking at. Actually, at the beginning of the week, remember we mentioned we had initial support is 31.36, and the market got down to, remember, 40. Then we rallied, then we came back down. We challenged it, and I think we got to 31.34. I think it was, and then we saw a rebound, good rebound off of that news with the situation with Iran and Trump making his little so many news bits coming out, but so we saw crude get whacked, and we made this move, and then our bias chart resistance we had yesterday was 32.05, and we had the analysis since last week, which was since this week, which was we would the resistance would be 32.05 or 32 even. Our bias chart support was resistance was 32.05. It would take a daily close above 32.52 to flip this, and not only flip it, but negate the downside action. So you can see that 32.05 did go and hold. We're going to keep the 32.05 for right now, and then bias chart support is going to be at 31.60. Let's go into the dollar peso. Just a moment. So we're pushing back here on this 1947, but a great area right here, if we see it, although this market continues to remain under pressure, is this 1937. I think that's just a fantastic area coming in. You can see here, some decent volume coming across here. So that's going to be our bias chart resistance. If we dip down there, and once again, I'm looking for a more, if we see that more, I won't call it extreme move, but more of a push down here. So let's see here. And on the upside, let's go move into the 2-hour chart. Boy, they have really kept this thing under some pressure. Look at that. And it's hard to imagine that just over a little over a week ago, we closed at 20.05. I was talking about, hey, look, we've got some pressure. But we still closed at 20.05 looking for a move to, 1985 with a little bit of a stretch at 1968. Well, eventually we went down there, saw a little bit of a bounce at that time when we got to 68. But, man, it's just been down, 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 hit the submarine horn on this thing. Anyway, let's see here. So we got the 1937 that we're looking at. It's actually higher here at 38.6, but just a little bit dip. You can see 37. Resistance on the upside. Well, if we see things turn around, this 1960 has been keeping it in tow, but really right there before we see a little bit of pressure, which is going to be 1956. We'll keep it tight. And let's go move into the cash dollar index. Well, we did, come up in here into this 50% here. And yesterday, you can see here, we even had a nice little gravestone doji on the 2-hour. We actually had two back-to-backs on the 30-minute. And we'll move into the 30-minute to look at that. And look at this right here. And still the euro wasn't, rallying or moving. It was really trading, rather quiet. I would have thought we'd seen a much nicer bounce off of the euro when we came down there. So looking now, we'll go right here. The euro comes under some pressure. We're going to go right there with them. 98.92. And 98.88 is 61%. So, because even here at the 50%, we haven't come off that much. You see what I'm saying? So we're not seeing, you can't say we're seeing a good reaction. Well, we may eventually end up seeing a good reaction. The euro turns around. But I'm saying at this point, we could reassert ourselves. And so this would come into play. Because generally what happens is if when you come up and test a fib, if the market doesn't, hold its own here, then you go to the next line. If we see I'll give you an example. Let's say, and we're looking a little bit further in the future, so to speak. So let's say we'd come up to the 98.73, which we did. We tagged it. That's why I was looking for that support within with the euro at the 9.89. But let's say that we saw in this market comes off down to about 25 or 30. So then we would have said, yeah, we saw a good reaction to the 50%. So when you come back up here, you're not going to see any reaction at the 61%. You generally go to the following one after that, which would be 78. But at least at this point, we haven't seen that big of a reaction. We've come off a bit, but have we seen this market turn back from 50%? At least not yet. So if we do get the ECB and the Draghi does whatever stimulus and we rally up, then yeah, that's where the 61% would come in play. But we're going to go on a confluence of here with this level right here. So it's going to be 98, 92 on the upside. But you would see some confluence with the 61% of this move. So 98, 92. And on the downside, right there, 98.21. We do have 14. 14 is huge, the bottom of the zone here. We'll go with this 98.21. 14 is huge, though. It is. But initial support would be the 21. And we'll keep that one a little bit simple. If it gets beyond that, then we'll probably would goose the stocks below 14 anyways. Let's go 21. And let's go move into the cross rates now. And this QEN has really picked itself out of the dirt. See, this is a good example. Remember what I was mentioning about the fib? I was just talking about the cash index. So here's an example where not bad here, this 38%, but you see how the market, it just kind of paused a little bit, gathered itself a little bit, and then we just continue to go and move higher. So there's no, so now you'd be looking at the 50%, but we'll look at a confluence. So let's bear with us. And this is a decent reaction point. So there's nothing wrong with that measure here. Let's look at the 50%. So you can see here now, this is where you can see a little bit further action take place. And we've seen it right here. You see, as we come in here at the 50%, that's 69.78. Now we'll move that here because there was no reaction whatsoever here. And we'll see if we see some confluence on a bigger pullback also. We got 69.78. And the 38% comes in at 70.31 on this bigger move. Okay. Let's take a look on the 2 hour. Good little solid level right there, 69.65. See that? I should make the case right there, which comes in right there. You got 69.73, confluence with 69.78. So we're going to go with 69.73. We got the 78 row right there. Let's call it 69.73. And 69.78 is the 50%. You can see that here. And bias chart support. It's going to be right there. 69.08. Let's go now with the euro yen. And obviously today we could see some pretty good swings in the euro. We're actually going to use this to stretch this to give a little more room. 1934. 1934. We'd have to get past here to say it's bullish. I mean, on a very short-term move, you can say it's a little bit of a reaction, but we have to get past here to flip it to bullish. On support, it's going to be all the way back down here, 1837. 1837. We got 36. That's fine. Let's go to Euro-AUD. Well, we talked about this, and people have been trying to pick it up. And there's a huge, huge area. I myself was going to pick it up yesterday. I didn't. I was going to pick it up at, I think it's put on there, 60. I put in the chat room, 60.08. I take a stab at it at 60.08. I was doing some other stuff, and crude was coming apart, and gold. I'm actually going to start trading crude again. So I was, posting some charts, talking to DK about this. I'm going to start trading crude again, and of course, everything all happened so fast. Just I don't want to jump in and, but I am going to start trading that on an active basis. Um, so I missed out on this opportunity. I didn't even get with that opportunity. And we talked about 59.89. Oh my goodness, it even came down to that major support level, 59.89. And but we had a nice, but anyway, I was gonna get long 628. I didn't take advantage of it. It's higher now. And I mentioned 59.89 is just a huge, big level. So we're gonna go with that 59.89. If I'd have seen that, which I wasn't paying attention, I would have gone and taken a stab at that one at 59.89. That's a big, big, big level. A big level. On the upside for right now is going to be, let's give it some room up here, right there, 60.60. And Euro Kiwi. Right there, 70.70. Obviously, like I said, we got to widen out the areas because of what can happen with the euro today. So we're going to have these wider ranges to take in that potential move. If we see the euro go a little bit nuts, that would be a stretch here, but realistically speaking, it's going to be 72.10 right there for the resistance, 72.10. Let's see, let's go move into the Aussie. Here's another example too. Remember what I was saying about the fib? So here's another example. You see the market come up to the 61%. You see right here, and we only ease back a bit and we start reasserting ourselves. So we'd be looking at the 71%. Now, if we had seen a good reaction here, then you wouldn't look for the market to stop at, let's say, the 78%. So let's take a look where we're at. And also from a longer term perspective. And we'll see if we see some confluence. Look at this thing. It's even gone past the 38% and it's still chugging along. At least for now it is. So you can see here the 78% doesn't even come until 74.95. That's some decent little resistance right here, and also coming into some volume. You see that right there? So it's going to be 74.42. And support, well, that's pretty clear as a bell right there on this dip. 73.59. That's actually, I think we had that from, and actually was a good little area for resistance down support. Yeah, you see there, 73.59. That stays the same. Let's go and move into the guppy. 33. We talked about this one, remember? We actually were at this 161%, and we've challenged it again. So it's going to be 33.31 on the subside. Here's the 33.20. That was the 161. So it's going to be 33.31. Boy, we revisited that area again. 32.50 on the downside. And let's finish up with sterling on. Okay, it's going to be 78.30. Sterling's trading pretty quiet anyway now. It's going to be right here. 80.03. Okay, and here we are back to the main page again. We are seeing the crude oil come under a little bit more pressure. We're coming, just getting past this 38% here at 55.60. A little bit more additional support coming in at 55.32. But once again, like I said, after these huge moves, but let's once again we're back on here with the euro. We'll see how this goes and plays out. I think Draghi will offer, but I don't think he can use all the guns. I just don't see it. So let's go and get this posted here. Last look here with the bias chart support. Okay, there we are. I'll get that posted. Good luck on ECB day, and we'll see you in the chat room.